The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And taking a quick look at the markets and where they're at right now, we got the S&P is up a strong 10 points after the last couple days drawing on back. Don't get too fooled by that. One day, we'll see how it goes, but I wouldn't be saying that, the worst is over here. At this point, expect some buying into the week, shorts covering, all sorts of reasons we can lay out some earnings. We got big things. The Fed purchased the market up today, and talked about that this morning during the during the Bull Bear Binary Hour. Steve Rhodes, we talked a little about the Fed and how they decided to turn on the print machines, and you can line it up right with the low of the day. So we'll go into that a little bit. I'll show you how I know that, how I found it, and how you can find it too. NASDAQ up 17 points, Dow up 98, Russell up 7.4 points. We got gold down 6.7. And copper is, let's see, copper right now. I just want to make sure I'm looking at the right one here. So it's down 0.5% on the day. So we got copper right there. And then let's see, we have corn is flat. So corn literally unch on the day. We got soybeans down 7 points. Oil is looking pretty flat on the day as well. And whenever I see it, it always makes me want to make sure I got the right chart up. Okay, it's up actually. It's just rolling over, so it's up about 15 cents. And let me double check corn. Okay, yeah. I mean, corn's flat on the day. And then we got natural gas is up, let's see, almost 0.75% right now. It's at 0.77%. We got euro dollar is down a pip. Pound dollar up 4. Aussie dollar up 74 pips. U.S. yen up 25. U.S. Canadian up 35. Had a nice play on the CAD this morning. Talked about that yesterday. We'll go over that, and hopefully you took advantage of it. We also had the U.S. franc went down 13 pips, and the dollar index is negative on the day right now. Not that negative, though. So King Dollar not quite winning on the day, but at the same time, not quite getting beat up too strongly either. So let's see here what we can pull up. And I'm trying to get my charts to load on the screen so that way I can show you exactly what I'm talking about on all this. But let me do one quick refresh, and I'll just try it in a different browser. But for some reason, it did not want to load. And I know that you would like to see them. And while I'm working on that, what we'll do is we'll go into the fundamentals. And this morning we had a bunch of reports come out on the USD CAD. And let me open that up. All right, so on the USD CAD at 8:30, they had their core CPI, their core retail sales, their CPI, and their retail sales all came in negative. Okay, every one of them came in negative. Obviously, that's not too good for the Canadian dollar, which came for the, I guess, the dollar, Canadian dollar in the sense of, or the dollar Canadian, simply because we were able to go in and take advantage of that trade by doing a simple strangle. You go risk 10 bucks on both sides, and pops up. You basically get out of it at about $43. And with that, you're able to make, a little over 100% return in a matter of a few minutes. And so, you can't complain about making that. And, I mean, it literally just took right off. Let's see here. Maybe this will work. And I do not know. That's really weird. Okay. Let's see here. All right, so I'll come on back to my charts after the break. I'll get them fixed during the break. And we'll just go through and talk about a few different things. We also had the German IFO business climate, and that came out at 4 a.m. Came out a little better than expected, and so that basically helped level off the Euro USD. And let's see here. After it had quite a bit of movement going on, but let's see, it started rallying early this morning around 4 a.m. though. Sort of interesting, around 4 a.m. Euro dollar actually got sort of pounded down. It rallied up, and then it had some just pretty big, quick drops, like 30, 40 pip drops over and over, but then rallied on back up to almost be flat on the day. Now it's actually pulling back down, and but I mean it's only down a pip from really yesterday's close. So some sort of weird. It looks like sort of small move on the euro dollar, but really, and that's one of the things I sort of get it cracks me up. You're watching the news, and they're like, the market was only down 2 points today, and but you're like you've been in the markets, and it was up 15, down 17, and ended down 2, and so it's interesting how people view the market just on that end of day basis, and they have no idea the massive fluctuations that can happen, in between. And I mean, we had a high on the euro dollar, went all the way up to 1.3244. And so 1.3244, I mean, you're talking about, 60 pips from where we're at right now. And, that would have been great with the diagnostic deviation levels as well. So going in and pulling those up and looking at the deviations. And again, make sure you get access to those over on TFNN. And we got euro dollar right here. Looks like the high was 1.3. Let's see. We were shooting for a potential of 1.3230. We hit that. And the next level we were going to be going for was 1.3247. That was the next deviation level. We hit 1.3244. So it's 3 ticks shy of the next deviation level. But definitely hit the 230. And then literally right after it hit the 230, I mean, that was like basically the last big spike. And then it fell on back down to a low of 1.3144 over on the euro dollar. And looking at that 1.3144, that actually brought us back down to a half deviation level, which was 1.3146. So we had a half deviation move up and a half deviation move down, which actually, if you add two halves together, you get a whole, which means we had a whole deviation move on the euro dollar. That was there for you to take advantage of, but the euro dollar only shows that it was down 2 pips if you're just looking at the end of day compared to yesterday. Okay? And let's see here. The other things to check out. We'll go in and look at a little bit more of the news right here. We got, let's see, German stuff. Not a big deal last night. EU economic forecast. That was more of a report, so that wasn't so much an easily tradable event. You really would have to be in the markets, reading the reports. By the time you read it, the move happened. The big thing is that we also had a nice Aussie dollar move. Again, that's a little bit more difficult to trade the Aussie dollar. Whenever a governor comes out and speaks or something like that, or Bernanke or whatever, but I mean, the one thing you can do is, knowing that they're going to talk, is you can go in and you just basically straddle the speech. So he came out, he spoke at 5:30 last night. That was 4:30 Central Time. And, you may go, well, how could I, possibly do that? Well, you would have had to wait until after the market opened up. And so, or you could have went in, and this is one of the big things you easily could have done last night, and so many people forget about this when they trade on Nadex, is the weekly binaries, and it's Friday, okay? So, think about it. A weekly yesterday expires in 1 day. It's like a 1-day binary. So, the weekly binaries close at 5 p.m. Eastern Time. All right, well, when is he going to start talking? 5:30 Eastern Time. So, when do they reopen? At 6 o'clock Eastern Time. So, when could you put the trade on? You could put the trade on, well, basically, before 5 o'clock. So, you go in there a few minutes before, and you go for 1 deviation. Normally, you wouldn't be able to do 1 deviation on a weekly binary, a 1-day deviation on a weekly binary, because it would, not have as big of an impact if you're like 5 days out. But whenever you're on, Thursdays, Fridays, weekly binaries can actually be great for trading, and you can get into them before something like this happens. Like, there wasn't anywhere you couldn't have got into Nadex at 5:30 when he started talking, but you could have got in at 30 minutes before he started talking and 30 minutes after he started talking. And so on that actual report, you could have got in like I said, right there at 5 o'clock and straddled it. And if we go in and we pull up our deviation levels over on the Aussie dollar, let's say we were just targeting one of the deviations here. We pull them up, and we got 1.0. Let's see here, 306. I mean, that alone was one deviation by itself. That was a full deviation move. And he starts talking. He comes out, and then the market opens back up at 6. Well, as soon as it opens back up, you're up a deviation. And so you could have put a trade on for a very low risk and already been up that full deviation, and it kept going on up to 1 point. Let's see, the high we got on the day on the Aussie dollar was 1.0339, and 1.5 deviations was 1.0335, which is perfect. Okay, so meaning it hit it, and as soon as it broke through that, then you could tighten your stop or get out. So either way you were trading it, the Aussie dollar was clearly flying up. There's some positive news that came out of whatever it was that he said. I didn't read the report. I don't care what he said. I mean, that's good for going back and explaining and doing commentary. But as far as trading goes, you follow the charts and just know when market impactful events are going to happen. So, and a lot of times that's sort of interesting. I talk to people, and they think when I say I'm trading the news, that I'm trading the news, like that I care what the news says, that I'm following the news. Not so much, okay? I'm trading the news as in I want to know what market to trade, what time to trade it, and when it's going to move, okay? I don't care if it's good or bad. I hope it's just one or the other extremely, because then it's going to move one or two directions, and I can play both of them at the same time and put on a risk-reward trade of 1-to-1. So that would have been a very simple, easy trade that you could have done last night on the Aussie dollar. Like I said, a little bit more challenging event because it's a governor speech, so you don't know if it's going to move much. But, here, one of your big advantages is you put it on like right there at 5, right before the close. When the market opens back up, 30 minutes has happened since this guy started talking. If it's not moving, just get out. You're not going to have that much of a loss. You're only talking like a 1 hour time decay, and you still got, 22 or 20-something hours left in it. So you only have like 1 hour, 22 hours that have burned out, and you don't have. That's not when the exponential time decay kicks in. That's closer to expiration itself. So since it's not that big, it's actually a pretty low risk trade as long as you're willing to get out if the market's not moved after that announcement came out. So you could. It's not your. Not only is your risk defined already on Nadex because you can never lose more than what you put up and you can never be stopped out, but you also can just get out. And it's sort of funny. I mean, some people just don't take losses on Nadex. If the trade isn't working, it's okay to get out. Now, the advantage is you can't get stopped out, but, and usually I'm not going to just hop right out, like maybe on a directional trade. But if I can tell, based on the charts, that something is saying we're going the other direction, why would I take on the additional loss? I don't need to. It's not a matter of getting stopped out. It's a matter of the trade's wrong now. Let's move on and go to the next one. All right, so stay right there, and we'll be right back after this break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks. Welcome on back here to the Diagnostic Trading Hour. I got the charts up and running. And right over here, what you can see is... got the Aussie dollar chart up, and you can see like right after that little speech, everything took off on the Aussie dollar. And when it came on in, then you got that full deviation move right there, and this was the deviation level right over here. And so you would have been able to take off the trade. Actually, it was a little bit lower than that. It was 1.03. Here, I'll show you what it was exactly. So no reason to guess. This is black and white. You don't have to guess. So over here, Aussie dollar, 1.0306. All right, we may be pretty close. 1.0306. So literally, I mean, just look at how that stopped, like, to the T, okay? I mean, perfect. One deviation. I mean, it just, right there, the high of that is 1.0307. So, I mean, you're talking a tick. I mean, that can be bid-ask spread. So that's one of the reasons I say, I'd give it a few ticks. Because just the bid-ask spread alone could actually be those few ticks. And most charts are quoting bid, so the ask actually could have hit it, or, vice versa type thing. But anyway, so right here, we hit that. Now let's go over and let's check out the USD CAD, because we were talking about that trade earlier this morning. And on the USD CAD, we had the trade this morning. That's one I said last night. It's like, hey, there's a bunch of news coming out in the morning. We got a lot of other stuff, so what's going to move? Well, the USD CAD's going to move. When's it going to move? When the news comes out at 8:30. So, let me look at those reports right there. Yeah, 8:30 with 1, 2, 3, 4 Canadian trades, CAD trades coming on out. And so we go over here and we go, okay, well, what's the USD CAD? 1.0230, 1.0251. So let's look at that right there. We got 1.0230 right here. And then 1.0251 right here. And so you can see it moved right on up, literally perfectly. Let's see, what's the high at? 1.0230. Is that it? Well, oh, that's 1.0230. So you can see right here, USD CAD, 1.0230. And that is the one deviation mark, which is what we're targeting. Literally to the tick. Okay? Right off the news. I mean, that's 7:30, that's 8:30 Eastern. Off the news, boom, we're up. We hit the one tick deviation and we stop. And we go over, we stay there. I mean, it's a resistance line. It tries to take above it, does a little pullback first to get a little momentum going, and then flies up, hits the next level, and then stops. Trying to break it, can't break it, finally pulls down, hesitates a little bit at the one deviation, falls down a little bit more, and let's see, what's our 0.7? We got 1.0230, and then we go to 1.0217. Is our next deviation level, so right here. And as you can see, look at how it actually came back down to the 0.7 deviation level before coming up through it. I mean, it almost starts to look like fibs, but, you know, easier. Comes on back down, hits the one deviation level, comes on back down further, hits the 0.7 again, and stops. And so you can see, I mean, there's so many advantages of using these, and you don't have to figure anything out. I mean, it's there. It's right in front of you. And, I mean, this happens over and over and over again every day on the markets that we're following. And so you can use this for take profits. You can use it for stop losses. You can, like, literally, I mean, I'm a trader right now. I know that is, he's actually using it right now. He went in, he shorted the NASDAQ, and he's using the deviation level as a stop loss. So saying, hey, I don't think it's going to break the deviation. So you go in and look up the NASDAQ right here, and we go and we pull up, okay, well, what's the stop on the NASDAQ? Well, on the NASDAQ futures right now, it just went up, and we got 27.32 and 27.39.75. And so you can use that. We also, if we go to, actually, Russell, that's the one I think we're looking at right now. So on the Russell, so 913.6 and 917. So let's pull that up. Let's zoom on in. 913.6. So it just sort of broke that level and decided to go short, you know, volume, etc., you know, multiple different reasons for doing so. And then you put a stop like right here, okay? And in doing so, then you basically are using the deviation level to give you confirmation of, hey, I want to go short, and where do I think it can go down from? And using that as a stop loss when you're wanting to reverse. You also could be looking at it as, you know, that's where I'm looking for a reversal. So I'm using it for a stop loss. I'm using it for a reversal. I'm using it for a target price on profit. I'm using it for an area where if I'm going in and it's hitting this and I'm trailing my stop on the bar that breaks it, then I'm using it to help me actually manage my profit. So it can help you manage risk, help you manage profit, help you have a realistic expectation on price movement. Stay right there, folks. We'll be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insights subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And what we're checking out right now is we're just looking over at the deviation levels, how they're working like a charm again today, and they can do so many things to help you out. And I put these because so many people are missing statistics in their trading. Okay, you got maybe you got your fundamentals, and I don't mean the fundamentals that like, hey, the PE ratio is bad, so the stock's supposed to go down. Well, maybe it's supposed to go down, but they don't mean it is going to go down, right? I mean the fundamentals that let you know when something's going to move. So, if I'm trading fundamentals on a company, I'm trading like when the things get released. Not because I have an expectation of direction, but simply I want to take advantage of the known instrument that's going to move and the known time when it's going to happen. And people obviously have their, technicals. We all love our technicals. And I mean, when I say technicals, I mean technical indicators, I mean charts, I mean bar types, I mean volume. I mean all the stuff you look at on a screen having to do with price and volume, And then you got your statistics. So, and some people have that. Very few people use statistics. And then you have your seasonals. And you have I'd say a larger majority. I'd probably say the largest majority uses basic fundamentals, which isn't the best idea. And then then you're going to go from there. The large majority of traders are going to rely more on their technicals, and which is great. And then a small majority uses seasonality, which is very important, very helpful. And then the final piece, statistics, is, the statistic is probably that it's like 1 in 10,000, or worse, that actually use statistics in their trading, right? So can pretty easily make numbers on statistics, I guess. But for these statistics, we don't make them up. What we do is we use the expected movement by the market. So they're putting their money where their mouth is. They're saying the market's going up, going down. They're hedging that. And it's amazing. I've been watching it this week because we've had some pretty interesting swings. on the deviations. And like last week, I mean, we were averaging somewhere around 12 for a full deviation a day on the S&P 500. And then I watched it's actually down to something like 9 on Monday because the market was, not open that long. And then it went up to 12, and then all of a sudden it went to 13 yesterday because like 2 days ago, and then it went to 14 just because we're having all these massive moves in the market. So as the implied volatility is increasing, then that price is actually factored into, that implied volatility price is actually factored into our intraday implied deviation, not standard. Standard is historical information. It's outdated. It's saying what the market did do, it will do. It has nothing to do with what the market will do. So we use the implied deviation to let us know how far the market says the market will move today. And we factor that, and we put the tables up there in black and white for you every day to take advantage of. And if you're intraday trading at all, any of the major indexes, commodities, forex pairs, this is going to help you. And we're going to expand them out, and we've had some requests for it, so we're going to do it. We've actually been recording the data now for a few weeks, but we're going to expand them out eventually to where you can go in and you can pull up, like, there's thousands of stocks, ETF, and indexes as well. So even if you're a stock trader, ETF trader, index trader, you'll be able to take advantage of the deviation formulas and using them to help you, and know, like, hey, where should I expect the market to turn around? And once you have them, you will realize how accurate they are instantly, and you will feel like you're blind if you don't have them, because you're just on there, just literally totally guessing, and that's what you're going to feel like. You're just going to feel like you're just playing a guessing game. And we can go over here and we can look at the deviations on the S&P. Let me separate that out. There we go. And on the S&P over here, let me close out this, and also go through another trade I did today. Talked about that on the Bull Bear Binary Hour, and I want to make sure I did teach you where and how to find that information that I used to help me with that. But over here on the S&P, we had an expectation the market would move up to 1508.1, then 1510.9, and then maybe up to 1515.2. We have a 14.2 deviation right now. So 1508.1. So we hit that pretty quick right there. Okay. And so we can put that on there. And then we also had a trade at 1510.9. So right there. And then the next level would be, like I said, be up at 1515.2. So if the market does continue to rally, then we'll be looking for a move up to 1515.2. So right here, okay? And I like to look at these on 10-minute bars because, now whatever you're trading, I'm not saying you need to trade 10-minute bars. I rarely trade 10-minute bars. But for the deviations, I use them to help me set stops because it does just a really good job overall, usually is helping me set the stops. And so I'm usually going to set it, within like a couple ticks. So we get the low right here. We have a low 1509.5. And we go over here, and maybe it got stopped out already. Let's check it. 1509.25. 1509.5. So we haven't got stopped out yet. Like I said, I like to use a couple ticks simply because of bid-ask spread. Okay? So we do have a couple ticks left over here where we're waiting to get stopped out. If it dropped one more tick, we'd be out. And you could also get out. I mean, there's nothing wrong with just topping out at this point. I mean, we're already up at the 0.7 deviation. But you can notice how it came up to the 0.5, fell back down, came up to the 0.5, just hesitated, finally came to 0.7, and, we have our stop right there. And I can turn on over here, and you can do this in pretty much, you should be able to do this in any charting platform. If you're not, then I definitely check out NinjaTrader or Thinkorswim, because you can. And you can go in and look at your highlighted, your overnight session. And I love to use both platforms. I use both of them all the time. They're pretty much always open on my computer. And you can see even in the overnight, we have that move on up, and it hesitated right here for about, half an hour. Right at the half deviation mark. It sort of broke up through it. And used that now as a resistance level for a little bit. Finally broke down, then just chopped on it. And then finally pulled back down a little bit. And did not quite hit the gap fill, and there's a reason why it didn't hit the gap fill. So let's go into why. Let's go down and let's literally broke this down to 1-minute bars. All right, so right here at 10:12, we're hitting our low. And we sort of hang out for a couple minutes, and all of a sudden we just go up. Why? One, did the thing not fill? Because the gap fill, I mean, that's a trade that wins a lot. And, you know, I won on the Nasdaq. It actually did fill before it reversed. And on this one, I got out at break even on these trades. We sent out the thing to get out on break even on them. But why did it go the other direction? Okay? And could you have known that that was going to happen? And the answer is actually yes. So, how in the world could you know that the market's going to go in the other direction? Well, you've all heard the saying, don't fight the Fed. Okay? Hopefully you've heard that. You've definitely heard don't fight the trend. Okay, well, also, don't fight the Fed. So go over here to newyorkfed.org. All right, newyorkfed.org. Under Markets, then click on Open Market Operations. Under Open Market Operations, you're going to see two links that you need to pay attention to. You're going to see Temporary, and you're going to see Permanent. Okay? And so on Temporary, you'll notice today there was no announcement. So meaning they did not go in and do some purchases. But if you go back in and show last 25 operations, back on January 18th, they did do something. You know, we can go in and I can pull up an extended chart on that and to show you what happened when that one came up. Right here, there we go. Okay. And we'll pull up to say the S&P. So let me go in and do data series. I'll load 60 days. And we'll put that on. And then we'll just, we'll look at the S&P right here. There it is. Okay. So we got the S&P contract. And then now what I'm going to do is basically just scroll on back. And let's see here. We want to go back to, we can go a little bit faster than this. Here we go. A little bit further. Alright, so the last time they did this was on the 18th of January, and they did it at 9:55 a.m. So, if we go in here and we look at the 17th, 18th. Okay, 18th of January. And then we'll expand it a little bit more so we can see our time frame there. Right here, what you're going to notice, sort of interesting, that they actually did come in and they had this horrible Fed report that came out. Okay? And the Fed manufacturing index was wretched. And 5 minutes before the report scheduled to come out, they release that they're going to start buying some bonds. Okay? Well, the report comes out, and the market's like oscillating on it. It's trying to pull down. They start initiating this bond buying program. They actually do over several days, and the market rallies over several days. So you can see right here, a multiple price the same day, but the term of operation, like while it's going to be going, it's 5 days long. Okay? And they won't actually close it until 9:55 a.m. on the 5th day, meaning on Wednesday, the 23rd there. So very quick date that they're going in and taking advantage of this. Anyways, they do that, and when they do that, even though the market starts in one last little pullback, it then pulls up, and it pulls up for days. Okay, right there from the Fed pumping up the market. So how does that apply to today? Okay, how can we use this information right now? So that was great for then. Well, one is, check this page, and you'll notice they always come out at like 9:45 or 1:30, 1:45. Check it every day, all right? Right around those times, set up a reminder on your alarm, whatever, but to check and see if any of those announcements coming out. Now, remember, there's two links. That's the temporary link. You also go over to permanent, and you can actually see the operations schedule, and you can see today, so February 22nd, they did an outright coupon purchase. They released that they did it at 10:14 a.m., and they stopped purchasing them at 11. Okay? And then it goes, they list the CUSIP numbers, they list everything. That you can go in and take advantage of. So, okay, so 10:14. So now let's look at 10:14 today. 10:12, the market's crashing down. Within 2 minutes, okay, which means they started it before this. Within 2 minutes when they announced it, the market starts rising. All right. And I already said, like, what happened was this morning, I was going in, I was playing what's known as the gap fill. Okay, so what is a gap fill? The gap fill is the difference, and I can show it to you on the chart. It's pretty easy to see. The difference between the market opens and closes. We're actually considered putting together an entire just gap fill course. And not just the basics, but the exact details of how I do it. Pardon me. And so the market closed here at 4:15. It reopened at 9:30 a.m. Eastern Time. The gap is an expectation that goes back and closes because of all the limit orders on all the stocks that are in here that have yet to get filled. So I'm short, and this is taking longer than I like, okay, but I'm making lower lows. I stopped making lower lows. I'm not liking it. It comes back and makes another lower low, and I'm like, sweet. And then all of a sudden it starts pulling back. I'm like, what is going on? I hop over, and we got the open market operations, and they're buying the market up. So do I stay in and wait on this gap to fill because that's my rules? No, this is diagnostic trading, okay? The whole point, the show, is diagnostic trading. It's looking at how others look at the market and figuring out where that's going to make the market go, okay? So it's not so much being a technical, fundamental, seasonal, or statistical investor as it is looking at how does a technical, fundamental, or seasonal, or technical, or all four ideally, investors trade, and how can I take advantage of that reality, okay? And so by doing that, by putting all those pieces together, you get a much better idea of where order flow is, where it's going to go. And when the Fed's going to start buying, that means the risk, is going to lower on the market, and the bond payout is going to be lower. So therefore, more money is going to want to go into the actual cash market. And you can watch. It's just as soon as that happened, just start trickling right on up. And, you can't take advantage of this all the time, and I'm not going to say it always works. But most of the times that I've used it, it's worked for me great. So if nothing else, it's something you need to be aware of, because if you're short, even if you don't get out, okay, at least go in and tighten your, look at tightening your stops right then. And if you see another good way to get back in and go short again, you could always take it. But after I saw that today, I dropped any kind of, because I sort of get this bearish thing going on, man. We've been down, last couple of days. And helped me drop that bearish view, because I'm like, it doesn't matter what's going on, the Fed's buying the thing up. And I don't want to fight the Fed. I'd rather just make money off the Fed. It's going to take our money through inflation. We might as well take it back by capturing the inflation in the market. So stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. This is Darrell Martin again. We're going in and checking everything out. And, just talking about the gap fill trades. But when that report came out, use that to your advantage, okay? Use it to dispel any bears you got going on in your head, okay? And so let's go ahead and look at what else do we have coming up today that we want to take advantage of. And really not a whole lot. So not a whole lot of trades left for the day, but let's go ahead and look at Sunday. What's going on Sunday night? Is there anything you can do? Let's see. Don't forget we got the Italian parliamentary elections. Day 1 is Sunday. Day 2 is Tuesday. That could affect Italy because there's a lot of issues there that have still yet to be dealt with. And so eventually they'll come back to the forefront. We've sort of, there's this ebb and flow now to the European crisis. And they're trying to have that ebb and flow last long enough that it disappears, I think. But there'll also be a HSBC flash manufacturing PMI in China. That is a very high-rated impact. That could affect all the markets. So be aware of that one. I wouldn't so much trade it as I'd be aware of it. It could actually be the sole driving factor on a move Sunday night, Monday morning. And then going on over and looking at Monday night, let's see, got a bunch of guys talking. Got another governor talking over from Australia. So we got that one deviation last night. And That happens at 4:15, but it's on a Monday. Really not going to be a good trade for you to do on Nadex that early in the day. So that's really just not going to be one for you right there. Let's see. Monday's just a quiet day for news. Going to get a little bit more heated up later next week, and we'll be able to go in and look at the, let's see here. We'll have the CBI realized sales in Britain. So that'll be a 6 a.m. trade, so that's not too bad. That's not too early. You can actually take advantage of that one. And then we got a whole slew of dollar reports coming out at 9 o'clock, so you can trade gold on that. S&P, HPI, consumer confidence, Bernanke's talking. Woo! Strangle it. Enjoy it. So, strangle the Fed. But new home sales coming out. So that also obviously could be a big market mover, and Bernanke's talking just as those numbers are being released. So convenient. So who knows what that number is going to look like if he's coming out and talking at the exact same time. Either he's going to champion it or he's going to talk about this is just why we have to keep doing what we're doing. Either way, market's going to like or not like what he has to say, and I love random walk because that means I don't care. There's neutral, which is I don't care if it goes up or down or not too much. And there's random walk, which is I don't care if it goes up or down. It just needs to go one way or the other. Okay? So both are fun. Random walk usually can make more money. Neutral a lot of times will win more often. So, but doesn't make as much when it wins usually, depending upon what kind of strategy you're doing. And one of the strategies I've been doing is a butterfly. And so we actually could, maybe we'll bring that to the show next week. I'll teach you how to do a butterfly on Nadex to collect premium on a 1-to-1 risk-reward ratio. We'll put that together. And going on over, we got the, let's see here, trade balance report, New Zealand dollar. I got a couple other people. Really just a really quiet night. A little bit of Aussie movement, so maybe you got a medium impact report, maybe a 0.5 move on the Aussie 730. So you could do a short-term expiration spread. That's what I'd be looking at on that actual report. And let's see here, and we got one last piece, and you know what? We'll go ahead and just catch up on that tomorrow. And we have a caller, but show time is up. So, Randall, if you call back tomorrow, I would love to take your call on the deviation levels.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.